Our next guest says today's release of July's existing home sales was, quote, truly lousy and heavily influenced by the homebuyer's tax credit. Robert Dye works on the Bloomberg best-ranked economics team at PNC Financial Services. He's also a member of the National Association of Business Economics. Robert joins us now from Pittsburgh. Robert, welcome back to Bloomberg News. Always good to have you on.
Yeah, thanks for having me.
You say lousy, but tell us a little bit more specifically, how devastating was today's number?
Well, we dropped to 27% on existing home sales from 5.3 million units annualized in June down to 3.8 or so in July. And that's a historic drop here. And we're really seeing the major distortive effects of the home buyer's tax credit, which has heavily distorted both the new and existing home markets this year.
Robert, talk to me about what we're apparently seeing right now, an inventory overhang. What's that going to mean going forward?
Well, because of the paucity of buyers, very few active buyers for the month of July, and a lot of homes on the market, inventory shot back up into double-digit territory, which is going to have a depressing effect on prices. We've been actually seeing some pretty good house price data. There are significant lags on that data. We've been looking at house price data now through April and May, which are showing increases because of the positive effect of the home buyers' tax credit. Now we're on the other side of that. We're going to start seeing some drops in house prices in the Case-Shiller home price data, the FHFA data, things like that.
Robert, I got a note today from Constance Hunter of Aladdin Capital, and she writes that housing's definitely facing a second slump, and the data suggests prices are set to fall again, probably dramatically. Would you second that argument?
Well, it depends how you interpret that. If you would abstract out the home buyer's tax credit, the positive bump we got from that last November, the big bump we got from it this April, I wouldn't say we're on a second leg down, but by taking a long-term moving average. But if you don't abstract, simply look at the raw data, we're definitely on another leg down. I would say house prices could easily drop another 5 to 10% given current economic conditions. And if we do slide into a double dip, then we would have to bump that estimate up even more.
Again, and Robert, does this also involve confidence among buyers? Because with job creation where it's at and with that unemployment rate near 10%, buyers just are not confident about going out and purchasing a home.
Right. There's two components to this very bad number. First is the distortive effect of the home buyer's tax credit. The second component is the underlying weak economy with near double-digit unemployment, very weak consumer confidence, and consumers right now are holding on to those wallets and very reluctant to go out and make big purchases right now.
Robert, what's the Fed's role in this? We're going to hear from Mr. Bernanke on Friday, perhaps more clues about what the Fed might do to stimulate growth. Does the Fed have a role in this?
Well, I think the Fed does. And one of the things that they're going to be debating rather hotly, I think, is the role of additional quantitative easing. They've stepped back into that in a small way. We have this small ongoing drip of quantitative easing at this point. But I think if the data starts to look even weaker than we expect, then they might step back in a much bigger way and take a much more decisive role. That's their really last big arrow to shoot at this point. Obviously, nothing they can do with interest rate policy. The simple question is, do we go back into a bigger shot of quantitative easing or not?
Well, at this point, would a second round of quantitative easing even help?
Well, that's the old pushing on a string argument, and I think it would help in terms of a symbolic message that the Fed is monitoring. In terms of its fundamental impact on real markets, I think not so much. But I think the Fed would do something rather than stand by and look impotent, do nothing in the face of a slowing down or a cooling, obviously cooling economic recovery.
Robert Dye, PNC, joining us live from Pittsburgh, talking about today's economic data, that existing home sales number. Robert, thanks so much.